Good afternoon. Welcome to daily currency update from the currency desk. On Tuesday, we had largely sideways movement in the rupee against the dollar. This was after a major upside move on Monday. So, for a day or two, we might witness a very range bound or sideways movement in the rupee against the dollar, and this range is expected to be 55.8 to 56.1 in the spot. In the US front, yesterday we had the housing starts data, which was much lower than expected. At the same time, we had the building permits, new building permits, which rose sharply. So overall, this data indicated that though the previous housing data was not as much as high as expected or not improving, but at the same time in the future we can keep an expectation of higher demand from the housing sector or higher business from the housing sector. Overall, this data was slightly supportive for the dollar. In US, we have the Federal Reserve meeting which is going to release its outcome today. There are large expectations from the Federal Reserve of quantitative easing. When we talk about quantitative easing means mainly buying of banks' assets in order to give them more liquidity, in order to give them more capital, which can be transferred into the money market so that overall growth of the economy improves. Today, the expectations of QE are very high, as the Federal Reserve had promised that if the overall economic growth is sluggish, it would definitely come out with a quantitative easing round 3. And as we have previously seen from the past few months, the jobless claims have continuously increased. The overall job scenario is not much promising. At the same time, the retail sales data, which indicates the internal demand in the US, has also been sluggish. So because of all these bad economic data, there is huge expectation of quantitative easing from the Federal Reserve. At the same time, if there is no QE3, then at least a continuation of the well-touted Operation Twist is expected. If Fed announces a quantitative easing, another round of quantitative easing that is, then we could witness a major appreciation in the rupee. Hence, we would advise all our traders to trade carefully and not carry any risky overnight positions. All trades should maintain a proper stop loss, as the QE expectations would make the markets react in a very volatile manner, and there would be huge fluctuations in the market. Technically, at current levels, we recommend a sell in the dollar against the rupee. We can very well keep a target of 54 in the spot levels and maintain a stop loss of 56.10. The European front, we had the German ZEW economic sentiment data, which came in much lower than expected. This indicates an overall decrease in the confidence of the economic performance, not only of Germany but of Europe as a whole. So what we are witnessing here is that the bleak outlook of Eurozone is also slowly impacting the German economic data, and economists expect that in the long run it would impact all the countries in the Eurozone. Secondly, we had the Spanish bond auctions, wherein the yields have increased to lifetime high levels. We saw the 6-month, the 18-month bonds and the 12-month bonds yield increase by almost 200 basis points. Investors or the markets fear that if the yields increase to a great extent, then Spain would not be able to opt for any bond fundraising in the future. But at the same time, what we also saw is that the bid to cover ratio, that is the bids received for the bonds, were higher, at a higher level than compared to the previous bond auctions. So this higher bids also indicates that the yields could well stabilize at current levels or may also decrease slightly. In terms of euro against the rupee, we recommend a hold long position at current levels and maintain a stop loss of 70.87 in the spot, and one can very well target 71.18 in the spot levels. Also, technically, in terms of pound, we recommend a fresh long at current levels with a target of 88.43 in the spot. Coming to the Japanese front, we had the Asian markets and the Japanese market opening up positive, equity markets opening up positive in the morning session, mainly due to the Fed QE expectations. But what was negative on the Japanese economy front was the trade deficit of Japan has widened. This was as per our expectations as forecasted by us earlier, mainly because Japan has shut down its 54 nuclear plants which were providing its energy. It has to import a lot of energy, so its import consumption of energy has continuously increased. Due to this, as predicted by us, we have seen a widening in the trade deficit. So we might witness some correction in the yen against the dollar and against the rupee as well in the shorter run. Though overall we continue to remain bullish on the yen, as lots of buying happens on the basis of safe haven demand. We recommend technically a hold long at current levels with a stop loss of 70.70 against the rupee, and one can initiate fresh long positions above 71.51 levels in the spot. Thank you.